Have you ever looked at your 1099 income and felt a pit in your stomach? You see the big number you earned, but then you realize how much of it might disappear into taxes. Many contractors are terrified of an audit, yet they're actually leaving thousands of dollars on the table. Today, we are revealing how the IRS just gave millions of drivers a massive raise for 2025.
It is a huge shift. The IRS just announced the new standard mileage rate, and it is a game changer for anyone using their vehicle for work. But if you handle it wrong, you are basically waving a red flag at an auditor.
Before we dive into the math, I want to hear from you. Comment drive if you drive for work and home if you work from a desk. I will reply with the #1 deduction most people miss for your specific setup.
That is a great way to start. Now, the biggest thing on everyone's mind is usually what they can actually write off. A lot of people see stories on Reddit where someone claims they deducted 40% of their personal meals or their entire commute.
Right. I saw a post where a contractor was trying to deduct their train ride to work and even their home rent. It sounds too good to be true because usually it is.
Exactly. The IRS is very strict. A deduction must be ordinary and necessary for your business. That is the gold standard. For example, your daily commute from home to a regular work site is never deductible. The IRS considers that a personal expense. If you try to claim it, that is a fast track to an audit.
So, if the commute is out, what is actually in? What is this 2025 windfall everyone is talking about?
The big news is the 2025 standard mileage rate. According to IRS Notice IR-2024-312, the rate has jumped to 70 cents per mile. That is up from 67 cents in 2024. It sounds like a small change, but it adds up to massive tax savings.
70 cents for every single mile? That sounds like the IRS is actually being generous for once.
It really is, but remember, you have to choose between the standard mileage rate or your actual expenses, like gas and repairs. Most people find the 70-cent rate is a much better deal.
Poll time. How many miles did you drive for work in 2025? A, under 5,000, B, 5,000 to 15,000, or C, 20,000 plus. Comment your letter. I'm curious to see if anyone is hitting the high-risk mileage zone.
Let's look at a real-world example. Say you are an Uber or Lyft driver and you log 15,000 business miles in 2025. At 70 cents a mile, that's a $10,500 deduction.
Wait, over $10,000 off your taxable income?
Exactly. If you're in the 22% tax bracket, that's over $2,000 straight back into your pocket. You claim this on Schedule C, specifically on line 9. It's one of the most powerful tools a contractor has to lower their tax bill legally.
But there are traps, right? What about the person who thinks they can write off their whole car just because they put a company logo on the door?
That is a classic mistake we see on Reddit all the time. Putting a sticker on your car does not make the whole vehicle deductible. You can only deduct the percentage of miles used specifically for business. If you use the car 50% for work and 50% for groceries and kids, you only get that deduction for the work half.
And what about meals? I know people love trying to write off their lunch.
That is another red flag. According to IRS publication 4681 and 463, business meals are generally only 50% deductible. And no, eating alone at your desk while you work does not count. You need a clear business purpose, like a meeting with a client.
So, if I'm a gig worker or freelancer listening to this right now, what's my first move?
Step 1 is your records. You need a contemporaneous log. That's just a fancy way of saying you need to track it as it happens. Write down the date, the miles, the destination, and the business purpose. If you don't have a log, an auditor can disallow the whole deduction. Step 2 is to calculate your total miles. Step 3 is to make sure you have your Schedule C ready for tax season. You can check IRS publication 463 for all the fine print.
Send this to one friend who hasn't started their mileage log yet. You might save them from a massive IRS headache later this year.
Just a final reminder, I'm an educator, not your CPA or tax advisor. This is general information based on IRS publications, not personalized advice. Tax situations vary. Always consult a qualified tax professional about your specific circumstances before making decisions.